Howdy, Jacob here. Today we're looking at Johnson and Johnson, pharmaceuticals industry, 352 billion market cap, slightly lower enterprise value, current P of 9.2. Interesting. Growth not very impressive, but I'm sure everyone's heard of J&J. They definitely have a moat. They definitely own a crazy amount of things. Um, it'd be baffled if you didn't hear about them. Founded in 1886, so they've been around for a minute or two. Revenue is, like I said, pretty slow growth, but what do you expect for a company that's been around for quite some time? Gross margin, operating margin, relatively flat, actually down a tad, but still in very impressive margins here. Great margin business. They're one of those dividend aristocrats, meaning that they think, I don't know, they've increased their dividend in the last 100 years or something absolutely just bonkers like that. So I wouldn't expect them to get rid of that anytime soon. But it is interesting that um, outside of the most recent year where they had a huge earnings per share bump, their capital allocation is going more towards their dividend because they're increasing their dividend more than their growth of the business. Return on asset, return on invested capital, all amazing. So nothing nothing bad here. Balance sheet shows 22 billion cash, 1 billion short-term investments, 26 billion long-term debt, 3 billion short-term debt. I mean, that's essentially enough cash to just write it off. So we're not concerned with that debt by any means. Use of cash, their dividend is paying a hefty amount, as I said. So they're paying about almost $12 billion in aggregate for dividends, and that's going to be about 60+% of their free cash flow. So they're buying back a little bit of shares with their remaining amount, making acquisitions with a little bit, but majority of this money is going towards their dividend. I don't think they're getting rid of that dividend anytime soon, reducing it. And I'm not saying they should. I'm just saying, maybe just to keep them increasing it every year, we'll increase it 1% a year for our projection period. But in reality, I want that capital allocation go from 60 to 50, or I mean, they have opportunities for growth. I know they have acquisitions that can improve their margins. I know they have shares to buy back when they're cheap, when they get crazy cheap. And so I do want some capital allocation available to be able to do those things advantageously. So otherwise, some of these other assumptions for revenue growth, I would probably say maybe 4%. Maybe they'll grow slightly more than inflation. I think, they do have some type of moat, but I think their growth is, not amazing. Maybe they'll do 17 there. So just barely above market average for a P and price free cash flow. But again, that's because I do think that they have an advantage. They own so many products, everyone knows them, but the growth is really going to be dampening in my perspective. For margins here, I mean, pretty consistent. Maybe we'll do 20 and 22, maybe 21, 23. Share change, 1% of shares would be about $3 billion, $4 billion to offset stock-based compensation. That's about 20% of free cash flow. So let's do 1%. So this is saying about 50 to 60% of their cash goes towards dividends, leaving about 20% to share repurchases, and then leaving about 30% for reinvestment. Because again, we've seen that they have a historical very high return on invested capital and return on asset, and then acquisitions to make the company more efficient. You want very, very strategic acquisitions here for a company that's this big. So, I mean, really, for a company this large, 36% drop before you get the return we're looking for here. It might be a good enough company where you do your research, you just want 10%, whatever the case may be, if you plug in your own perspective. But for me right now, I just want essentially the greatest return for the highest probability. And right now, I just don't see that being the case at this moment. But again, we're honestly not terribly far off. So I do hope you enjoy the video. Have a great day.